What if the most powerful asset in the world is not a stock, not a cryptocurrency, not even gold, but dirt? Take a moment and let that sit. Right now, as you scroll through market updates and debate the next big trade, something far quieter is happening beneath your feet, literally. Vast stretches of farmland, stretching horizon to horizon, are being acquired at a pace that most people never hear about. It looks boring. It looks passive. It looks like the opposite of modern wealth. But that assumption is exactly what the smartest money in the world is counting on you to make. Because billionaires are not buying farmland out of nostalgia for simpler times. They are buying it for something far more calculated, far more strategic, and far more consequential than most people realize. The pattern becomes impossible to ignore once you start looking. Bill Gates is now the largest private farmland owner in the United States, holding over 270,000 acres across dozens of states. Across the world, billionaires and institutions are quietly accumulating land at scale. Figures like Ted Turner control vast land holdings, while sovereign wealth funds from countries like Saudi Arabia and China are steadily acquiring agricultural land across continents, from North America to Africa to Southeast Asia. We are not talking about a few wealthy individuals with a taste for the countryside. The numbers are staggering, and they are accelerating year over year. Hundreds of millions from private fortunes, billions from state-backed funds. This is not a coincidence. This is not nostalgia. This is a calculated, coordinated shift in how the world's most powerful players are repositioning not just their wealth, but their control. To understand why this matters, we need to go back to what land used to mean in the financial world. For most of modern financial history, farmland was considered a low-return, illiquid, and unsophisticated asset. It was the kind of investment serious money avoided. Investors chased tech stocks, derivatives, and digital assets, things that moved fast, scaled infinitely, and made headlines. Land was left to farmers and rural communities who worked it out of necessity, not strategy. It was seen as the past, not the future, a relic of an older economy that had been outgrown. Wall Street had no interest. Venture capital had no interest. The smart money, as it was called, looked elsewhere. That perception is now being quietly dismantled from the top down, and the people doing the dismantling are the same ones who once built their fortunes in those very digital and financial markets. It is geological, and it is permanent. Land is not like any other asset class. Think about what makes every other investment work. Stocks can be issued by the millions. Currency can be printed at will by any government with a central bank. Companies can be incorporated overnight with nothing more than a filing and an idea. But land cannot be manufactured. No factory produces it. No policy creates more of it. This is the line that reframes everything. You can print money, but you cannot print land. Every time a central bank injects liquidity into the economy, every time inflation rises and currency loses purchasing power, real assets become more valuable by comparison. Think about what happened after every major round of quantitative easing over the past 2 decades. Cash weakened. Tangible assets surged. Land sits at the very top of that hierarchy because it is finite, productive, and universally necessary. It does not depreciate like machinery. It does not default like a corporate bond. It does not disappear like a failed startup. While governments can conjure trillions of dollars into existence overnight, no printing press, no algorithm, and no policy decision can create a single additional acre of arable earth. That asymmetry is precisely why the smartest money in the world is moving toward it. More people, more need, more value locked into every acre. Inflation erodes the value of cash and bonds over time. As purchasing power quietly bleeds away, investors begin moving capital into real assets to preserve what they have built. Real estate rises, commodities climb. But farmland goes further than either of those, and that distinction matters enormously. Unlike a building that sits idle or gold, that simply holds a number, farmland actively generates value. Landowners lease their acres to agricultural operators, creating a steady and reliable income stream that does not depend on market sentiment. On top of that, crop production ties the asset directly to global food demand. This is strategic positioning for influence over one of the most essential systems on the planet, the food supply. Owning farmland is not just about financial returns. It is about controlling what gets grown, where it gets grown, and who gets access to it. Think about that for a moment. When a billionaire purchases thousands of acres in the American Midwest, they are not simply collecting rent checks. They are deciding which crops enter the global supply chain. They are determining which agricultural practices shape the soil. When a sovereign wealth fund acquires land across multiple continents, they are positioning their nation's influence before a single seed is planted. This is not an investment in the traditional sense. That is not speculation. That is the direction this is already moving. Wealth is quietly migrating from paper ownership to physical control. Think about what that actually means. Stocks, bonds, currencies, these are promises. They are representations of value, not value itself. But land is the thing. It is the underlying reality that everything else is built upon. The ultra-wealthy are not just diversifying portfolios. They are acquiring leverage over future scarcity. The personal impact of this shift is already visible in everyday life. Food prices are rising faster than wages in most countries, and the connection is not accidental. Small and mid-sized farms, the kind passed down through generations, are being absorbed into large institutional holdings at a pace that would have seemed unthinkable just 2 decades ago. Families who built their lives around the land are being priced out, bought out, or simply outlasted by entities with unlimited capital and infinite patience. Rural communities are losing more than property. They are losing identity, autonomy, and economic independence. The concentration of land ownership is accelerating inequality, not just in wealth, but in access to the most basic human necessity, food itself. When land becomes a financial instrument, the people closest to it pay the highest price. But the implications of that silence are anything but quiet. When a major corporation gets acquired, markets react within seconds. When a stock collapses, headlines flood every screen. But land deals operate in an entirely different world. They move through county courthouse records, buried inside limited liability companies, and offshore holding structures that trace back to nothing recognizable. There is no ticker symbol for farmland consolidation. There is no breaking news alert when a hedge fund quietly purchases 10,000 acres somewhere in the American Midwest or across the African savanna. The transaction clears without fanfare, without scrutiny, and without public awareness. A signature, a wire transfer, and suddenly the ownership of something ancient and essential has shifted hands permanently. The real question, the one that actually matters, is what this means for everyone. Farmland is not an investment in the conventional sense. It is not about yield percentages or quarterly returns. It is not about diversifying a portfolio or hedging against a bad fiscal quarter. It is about something far more foundational. It is about control over future scarcity. Think about what that actually means. In a world where resources are finite and demand is infinite, whoever owns the land owns the leverage. Not just financial leverage, structural leverage, now you know. They may not be fought over data, or oil, or even water. They may be fought over something far older, far quieter, and far more fundamental than any of those things. Soil. Not in boardrooms, not on trading floors, in county records, in shell company filings, in the slow, invisible accumulation of acres that most people never think twice about. The land stretching out beneath you right now, ordinary, endless, and quietly powerful, is already at the center of that battle. It has been for years. You were just never told to look. This is Behind the Spends, decoding the systems behind spending.